Alright, welcome to this new video about the difference between a market structure shift and a liquidity grab. I'm going to show you in a few simple steps how I use this concept to avoid many losses. You see this exact concept happening in every daily live stream we do together. So without further ado, let's dive in. If you've watched many of ICT's video, you know he focused on displacement. But not many people know exactly what displacement is. You can see displacement as large, aggressive candles. Big, beefy, green or red candles. And in a market structure shift, you see displacement. You see big green candles. And with the liquidity grab, you see prices trading lower or higher, taking out a higher or low, and it fails to displace above or below it. Now look at some examples. So you basically want to focus on displacement and mainly the lack of displacement. And liquidity grab is the lack of displacement. And this example, see we're trending downwards, and now with a little move upwards. And we create a swing high here. We keep continuing with the trend. Then you saw an aggressive move higher, taking out this swing high here. And as you can see this candle fails to displace higher. So if this was a market structure shift, this was a green candle once, this green candle, then should see higher prices because there's probably going to be a market structure shift. But there's a lack of displacement and you see the candle closes lower. That means this is liquidity grab. So we're probably going lower, targeting these equal lows and this swing low. So let's see what price does when it reaches this area. We're going there with energy. We're displacing upwards. So we're not closing below that low. Is there a swing low being formed? Not yet. There's no swing low here. So we create a swing low right here, and then this candle takes it, and the bodies fail to displace below this low. So this would indicate that this is a liquidity grab. So we are not going lower, but now we're going to seek higher price because after low, we displace higher. And where's the next swing high? It's there. And it takes it. There's no swing low created yet. Here's that low that's being created. You see that low stays intact and price trades higher, probably going to target that high. Then we are creating a swing low here inside this order block. And we are continuing higher. And you can see here, south side of the curve, market structure shift with energetic move upwards. So this is displacement. This is a liquidity grab. So we're going lower, but we are closing above the low. The energetic movement, that's displacement, and it will probably be your market structure shift. And when you go from the sell side to the curve, the buy side of the curve, you should look at, do my discount arrays, so do my value gaps, the bullish breakers, the order blocks, do they hold to give another confirmation that your market structure shift is confirmed? Let's see what price does. Price takes out this swing low into this fair value gap and order block, creating a swing low in a discount array before going higher, taking out this high. This is no market structure shift. Why? There's no energetic movement. And price goes higher, completing the market maker buy model. And if you can master this concept, you can easily get like 20, 30, 40 points every session out of the market just by using this exact framework. For example, here we are pre-open. We trade lower, we take out this swing low. These are consolidation candles, and here we create a swing low. There's no liquidity grab here, so there's no liquidity being taken out right here. But there is energetic movement to the upside. There's no liquidity being grabbed right here, and there is energetic movement. I wouldn't trust that because the biggest move happened when there's liquidity being taken out. So this low, this swing low, I would save for later. Then we move upwards, leaving some value gaps, and probably when you're looking at this market live, you would say, okay, this swing high is the next target. And I would think so too, I would agree. So then, where's the loss? Then we move up, swing high created, taken out by this candle, but then fails to displace higher. When you're seeing this, like with this energetic movement upwards, you could probably think, okay, maybe this was the low, but there needs to be big green candles. And there isn't. There's no displace upwards. This is a liquidity grab. So it takes liquidity and then moves lower, creating this swing low, taken out by this candle. There's another swing low. Then this 925 candle takes out this liquidity before moving downwards into a 1 hour value gap. So if price wants to go up, you want to see it displacing above swing highs or swing lows. And it doesn't here. Moves up, then it comes back into the range. So now you could say, okay, which lows? If price gives signature that it doesn't want to go higher yet because we don't displace above this high. Just like it didn't displace above this high. Where could the next draw on liquidity be? Well, we have this swing low, we have this swing low. We also created these equal lows here. So during the open, and there was a 1 hour value gap still resting here, you could have caught this move downwards. And the cool part is, here, there was a swing low created just before the 1 hour value gap. Price trades upwards, creating a swing high inside this SIBI for value gap, and then takes out liquidity. You are in a higher time frame discount array, and you see energetic moving upwards. So it takes out this low, but then it fails to displace lower, and it goes upwards. If you have a value gap, breaking structure. This doesn't look to me like a liquidity grab. This looks like a market structure shift. We take out this swing high, we take out this swing high with big candles. This can be marked as displacement. So a market structure shift. And then if you have a market structure shift, you can zoom out, okay, what was the sell side of the curve? And are we now at the buy side of the curve? And in the buy side of the curve, all your discount arrays should hold. So fair value gap gets straight into swing low being created. And why you could anticipate after this big move upwards, that price could come down to this fair value gap. Look at what price did after taking this high. It fails to displace upwards. So then these two candles indicate that we can see some swing lows being taken out. We have a swing low right here. And in this move downwards, we take out a swing low into a fair value gap, a bullish fair value gap. So this is a liquidity grab, this move downwards. And then you see that price, this doesn't close below here, but it goes above this. So back into the range of this low. And then we can target highs again. What's the next upcoming swing high? Here's a swing high that's being created. The most significant one is this one. Big green candles displayed upwards, creating a swing low inside a fair value gap. So in a buy side of the curve, price discount array should hold. If your price is chilling upwards, this swing high gets taken out. There's a move lower, and this is the question, is this move a liquidity grab or market structure shift? If this was a market structure shift, price would close below this low and then go lower, targeting these lows. But you know now, if price closes above this low, it fails to displace downwards, you know you probably will still see higher price and taking out this high, and it will go to the target. Thank you for watching this video. If you like this kind of videos, please like and subscribe, share with all your trading friends. And if you're still not inside this amazing group of people, go join this group in the link below.